You know how sometimes a niche idea just explodes? One minute it's a curiosity for insiders, and the next it's a full-blown global obsession. Well, that is exactly what is happening with stablecoins right now. It feels like everyone, and I mean everyone, is suddenly scrambling to get a piece of the action.
So what's going on here? Why this sudden, intense focus? We're not just talking about the usual crypto crowd anymore. We are talking about the most powerful institutions and people on the entire planet. Something massive is clearly happening just beneath the surface.
Things really kicked into high gear when the U.S. Senate, of all places, started fast-tracking a procedural vote on a stablecoin regulation bill. Now, let me tell you, when Washington, D.C. moves that quickly on anything crypto-related, you know the game is fundamentally changed. And this isn't just an American story. Not by a long shot. All the way across the world, you've got major financial hubs like Hong Kong and Singapore in a full-on sprint to roll out their own rulebooks for stablecoins. They are not waiting around. They're actively competing to be the new home for this technology.
And then, the old guard showed up. We're seeing titans of traditional finance, literal giants like JP Morgan and Stripe, launching their own stablecoin projects. Think about that. These are the companies that are the current system, and now they want to build the new one too.
And it's not just banks and tech companies. In a twist nobody really saw coming, even political dynasties are getting in on the action. The Trump family's company has actually launched its own stablecoin. This is a huge signal that the stakes have gone way beyond just finance and into the realm of political power and influence.
Okay, so with all these heavy hitters crowding the table, what in the world are they all fighting over? What is a stablecoin? Let's break it down, because the concept is way simpler and, frankly, way more revolutionary than you might think. So unlike Bitcoin, which is famous for its wild price swings, a stablecoin is designed to do the exact opposite. Just stay stable. The huge majority of them are pegged one-to-one with the US dollar. The easiest way to think about it? It's just a digital dollar that can live and move on the internet.
Now, the way it actually works is kind of genius in its simplicity. An issuer, a company like Tether, takes your real dollar and puts it in a bank account. In return, they create or mint a digital token for you on the blockchain. And here's the key. Because they promise you can always swap that token back for your real dollar, it keeps the price locked. If the price on an exchange ever dips to, say, 99 cents, traders will rush in, buy it up, and redeem it for a full dollar, instantly pushing the price right back up. It's like a self-correcting machine. So, while anyone can technically create one of these things, the market today is a two-horse race. Tether's USDT and Circle's USDC make up a whopping 84% of the entire market. So for all the talk about decentralization in crypto, this part of the world is actually very, very centralized.
So, is this a good business to be in? It is an unbelievably good business. Get this, Tether raked in an estimated $13 billion in profit last year, with a little over 100 employees. How? It's simple. They just earn interest on the massive pile of real US dollars and government bonds they're holding. With interest rates as high as they are, it's basically a license to print money.
Okay, so that explains why companies want to make them. But what about the other side? Why is there so much demand to actually use them? Well, the answer is a real mix of genuine innovation, some pretty shadowy stuff, and, well, everything in between. Let's start with one of the biggest good reasons, sending money across borders. The old way, using a bank, is a nightmare. It's slow, it's expensive, it's just clunky. But with stablecoins, you can send that same payment across the globe in minutes, for pennies, any time of day, any day of the week. For international business, this is a total game changer. When you really boil it down, the demand comes from three main places. First, the ugly. Its speed and relative privacy make it really attractive for illegal activity. But then you have the good. That exact same speed makes it incredible for legitimate businesses. And finally, you have the lifeline. For regular people in countries with insane inflation like Argentina, a US dollar stablecoin isn't a speculation. It's a powerful tool to protect their life savings.
And please, don't make the mistake of thinking this is some small niche market. The total value of transactions zipping around on stablecoins this year is projected to hit almost $28 trillion. To put that into perspective for you, that is already more than Visa and MasterCard's payment volumes combined. This isn't the future of finance, it's the right now of finance. Now, when you're moving trillions of dollars around, there is no way you're staying under the radar. Governments have absolutely noticed. And this explosive, unregulated growth has kicked off a brand new, high-stakes geopolitical game. The question isn't if this gets regulated anymore, but who gets to write the rules. And if you want to know America's motivation, well, they're not even trying to hide it.
The Treasury Secretary came right out and said it. The U.S. sees stablecoins as a key weapon to maintain the dollar's dominance around the world. For the U.S., this isn't just about protecting consumers. This is about projecting power.
The American strategy really boils down to a three-part playbook. First, if the whole world is using digital dollars, that just makes the real dollar stronger. Second, because those reserves are held in U.S. government bonds, a bigger stablecoin market means more people are forced to buy American debt. And third, well, America wants to be the one setting the rules for this new digital economy, not anyone else.
If you zoom out and look at the whole world, you can basically see three different camps forming. You've got the actively open countries like the UAE and Singapore, who are rolling out the red carpet, seeing this as a huge economic opportunity. Then there are the cautiously inclusive big players like the US and the EU, who want in but are moving very carefully. And finally, you have the clearly restrictive nations like China, who see this whole thing as more of a threat.
But China is playing a really clever long game here. While it's banned on the mainland, they're using Hong Kong as a controlled sandbox to experiment. The end goal? To eventually launch a stablecoin backed by their own currency, the yuan, and create a direct digital competitor to the US dollar. And this is where the story gets even bigger, because this entire gold rush, it isn't really just about digital cash. Stablecoins are just the first step. They're the foundational layer, the railroad tracks for a much, much bigger transformation of the entire financial system. The next huge concept is something called RWA, or Real-World Asset Tokenization. It sounds complicated, but the idea is pretty simple. Imagine taking anything of value, a piece of real estate, a famous painting, a corporate bond, and turning its ownership into a digital token that you can trade online. Stablecoins are just the money you'd use to buy and sell these tokens. And look, this isn't some science fiction fantasy. This is happening right now. BlackRock, the biggest asset manager in the world, has already launched a tokenized fund on the blockchain. In China, Ant Group is tokenizing things like electric vehicle charging stations to find new ways to finance them. The revolution is already here.
So what does all this tokenizing actually lead to? It creates this incredibly powerful effect called financial disintermediation. It's a fancy term with a simple, powerful meaning: cutting out the middlemen. This tech lets people pay, lend, and invest directly with each other, completely bypassing the banks that have controlled everything for centuries. And that is why the banks are so nervous, and also why they're rushing to get in on it.
Which brings us right back to the central question. What we're watching in real time is a fundamental battle. It's a battle between countries, between old money and new technology, between centralization and decentralization. And as all of this plays out, the prize isn't just about profit, it's about control over the future rules of money itself. The only question left is, who's going to win?